Good morning, Linda. And thank you for taking time out of your busy conference week to talk to me about an issue that popped up as a result of your reaction to my newsletter, where I made an oblique and possibly disparaging remark about the work of CPAs, which you jumped on immediately and gave me an impassioned feedback about the work of a CPA, how difficult that is, and your central theme, which I not only gladly but enthusiastically support and take up, which is, at the end of the day, you can't do more than the level of responsibility that the client is prepared to take for themselves. So before we go into that, maybe you can tell me a little bit about the various roles that a CPA in the States fulfills, how that might be different from an accountant in the UK or in the European context. So just what does a CPA do?
Thanks. I appreciate the chance to kind of give you some feedback. In the States, we get hired to do tax work. We also get hired to prepare financial statements. We get hired to do consulting. So all of those different items are different engagements, and I would assume it's kind of the same where you are. I'm not responsible, like it's not like sending your kids to school and you're supposed to be taught and this is the curriculum. It's a business agreement. And if all you want is a tax return, I have to have your financial statements. I mean, something has to be put together so that I've got a good record of your income and expenses and your balance sheet so I can do a tax return. It would be nice if I could spend some time talking to you about your numbers, but that's not really what you hired me to do. You hired me to do a tax return. That's it. Do a tax return. I can suggest I'm seeing things in these numbers, and it would be useful for you to have some time later or at any other time, or even spend some additional time now at an additional cost to go over some things. But that's not typically what you hired me to do. Tax return, done, check it off, compliance.
And is that the usual gateway to the relationship? I want you to do my tax returns, or are there other gateways to a CPA relationship?
Financing, if you've got a bank loan and they need financial statements, so you might come in from that area. But most of the time, a small business owner is looking for a tax return.
And when they come to you, do they generally tend to have their bookkeeping as a separate function up to speed, or do you see an enormous range of qualities?
Absolutely enormous range of where they are. Some are totally adequate. Some are really good. I'm going to say probably 80% of them are anywhere from in a shambles to really hairy without things tied down. Their loan balances aren't tied out. Their asset schedules don't exist. Their records from last year don't agree to their tax returns. So there's a significant amount of work that just goes into making the numbers tie in and be accurate. And they don't understand really the work that's involved in doing that. They didn't do it. They didn't want it done, but it has to be done to get the tax return finished. Sometimes they cooperate. Sometimes they understand what you're asking for. Sometimes it's pulling teeth to get the information you need to get.
Does a CPA carry any liability for
Yep.
the results of what has been put into the tax return?
The end liability is the person who's signing the tax return. It's their liability at the end, but it's my job to make sure that it's as accurate as I can make it. And ethically, I want it to adequately represent what their business did for the year. I don't want them paying tax on things that they shouldn't pay tax on. I want to make sure we've got all their expenses in the records. I want to make sure their assets are recorded correctly and we've depreciated them as we should. I want to make sure their loans are all booked. I would like to see their business going in a good direction. I would like that they understand their financials. It hurts when I see somebody come in with their records in a shambles and they don't understand what they can do if they have good records, how they can navigate, how they can budget, how they can forecast.
I'd love to just stop at that particular bus stop and explore the question of bad financial bookkeeping, which is really essential. I would say it is that without which you can't do anything else if you don't have good financial records. What is your experience of why people have bad financial records, or a shambles, or a mess? What is it? What would you attribute that to?
Sometimes they don't understand how to make it happen. It is a lot of times they got into business because they can do something really well. They're a good carpenter. They're a really good flooring installer. They can sell things. They're great at sales. They didn't get into business because they know what to do with numbers, the ins and outs. They don't understand the importance of it. They operate by their bank balances. I have money in the bank, therefore I must be profitable. Therefore I can take money. I can pay myself. I can pay my bills. They also are uncomfortable sometimes with money. They don't necessarily understand it. They're a little bit afraid of it. They're a little bit afraid of bookkeeping. You know, we've done that, the QBO boot camp, where we took some business owners through, here's what happens in your books on a cycle. Dollars
Can you explain what QBO is?
Oh, QBO, QuickBooks Online, QuickBooks Online is a piece of software. We use it a lot with clients because it lets us be in the file. It lets the clients be in the file. It's a very collaborative work solution so that we can pick up the pieces that they don't know what to do with, and we can kind of help them. But during this boot camp, we go through a cycle of dollars coming in, recording them in their records, dollars going out, recording those in their records, doing a bank rec, cleaning up their records. We actually cleaned up several months worth of records for clients who were not in compliance with their books, didn't have good records. And we were able to do it with them, so they weren't afraid. They could do their bank recs. They weren't afraid they were going to screw up their file. They're so afraid that they're going to do something that they can't undo. So they leave it alone. And we've got them to the point where they could actually do it, and could not only do it, but could successfully troubleshoot and keep their books in order and moving forward and make decisions about their business. So in the course of working through a cycle, and in some cases, many cycles, because we were cleaning up like 12 months worth of data, and we were not doing it. Linda did not do it. My other person in the office did not do it. We literally sat there with them while they did it and told them, here's what you do. Try it on your own. We'll come back to you in a minute, and let them kind of just practice.
Because when they leave the office with you, they go back, and that's part of their personal responsibility, is actually doing it themselves, or do you recommend that they engage a bookkeeper? Or, I mean, if somebody's good at installing or good at carpentry, is it a good use of their time to actually be doing ledger accounting?
It depends on the client, truthfully, and sometimes we can get it set up so it's easy enough that things come in and they can spend an hour with their books. They can do their profit first allocations, move their cash around, they can look at their business, and they can record their stuff and keep going. If they're a larger business, at some point they probably do need a bookkeeper or someone.
Is there a useful cutoff point, or a point at, is it a turnover thing, or is it a revenue thing? Is it a...
No, I think it's where you want to be in the business. Some of them get excited about that and they want to stay in that piece. I have a client with a $15 million business. He still does his bank recs because that to him is his control of where the money's going. He sees it all go up. all $1.5 million that he spends every month. He sees all of those transactions, and that to him is control. Should he be doing it? Probably not. But he's also very much aware of where his business money is going. It takes him 4 or 5 hours. It's part of his management work, his review of his business.
But he's not doing the actual ledger account entries, is he?
It happens in the system. He has several employees, so there's lots of bits and pieces. And I go back in and I do ledger account, like put in depreciation entries, put in the things that kind of make the business, the few things that a business of that size does need. So he has people inside to do payables and receivables and sales, and all of those transactions happen in his file as the business happens. And that's the best way for the accounting to be done. As you do the business, it is recorded in the records contemporaneously, and then you don't have to go back and backfill and kind of create all the stuff.
So you mentioned profit first. For people who don't know what profit first is, you and I do. We know that backwards as an operating system. Would you like to just explain very briefly what you mean by that?
Profit first is a cash flow system, a cash flow management system. What it involves is pre-deciding where you're going to spend your money. It lets you place an importance level on if $1,000 comes into your business, a percentage is profit, a percentage is operating expenses, a percentage goes to tax, some of it goes to owner's comp, the rest goes to operating. I think I covered operating expenses, but you're pre-spending your money. So there's never a spot where you're going, I have so much money, I could do something with it. Well, there might be if you were profitable, but you're telling your money where to go as it walks in the door. So your decisions are pre-made. It gives you a real target for keeping your expenses low, because if you don't have money in your operating account, then you've obviously overspent from what you wanted to spend, and you're not going to meet your profit targets. It sets aside money for profits so that you, as the business owner, the investor in your business, which I know is a huge thing that just needs to happen with all the businesses. They need to operate their business both as an employee, as an investor. So you get paid two ways, as the owner and as the investor. And it starts to really bring the cash flow that runs through your business into sharp focus. You see where the pain points are. If your operating account is running out of money, your percentages are wrong. You need to go back and look at your expenses and kind of figure that out.
Have you ever come across anybody in business who genuinely believes that the financial part isn't important? Not that they don't treat it with importance. We know that that happens a lot. But have you ever come across anybody who genuinely believes that it's not that important?
I'm going to say no. I think they all know in the back of their head that it's something they need to pay attention to. They just may not know the first step and the second step and the third step to make that happen. And if you can put it in front of them, so one of the girls that went through the boot camp came out of it saying, it was exactly what I wanted and what I needed, but I didn't know it at the time. I had no clue that that's what I would get out of it. The insight and the clarity about my finances and the ability to kind of plan ahead and move and look and understand how my business made money. I didn't know that's what I would get out of learning my finances.
Interesting.
Mm-hmm. I just thought I was going to clean up my books and spend less on my tax return prep.
Yeah, and the numbers were actually going to help them run the business as a business, rather than just being an annoying piece of homework that they have to do because the government wants them to do it.
And they were trying to save money because they were getting the books done. They were doing that part. They didn't have to pay their old accountant to do the books, to do the tax return.
Yeah, that reminds me of a story that somebody told me very recently about the balance sheet, where the client wanted his money back because he said, I didn't pay for that. I don't need that. Which was an interesting sort of perspective on how they viewed the whole accrual accounting method.
Yeah, that isn't what I wanted out of this situation.
Yeah.
And she got side effects, so doing it helped her a lot.
And that's something I think that both you and I have found. And I mean, I teach people to get comfortable around their numbers, and you do the same because you have a professional need to ensure that people who engage with you actually engage with you properly at a
Mhm.
minimum level of competence. And if I
Yeah.
would love to read to you what one of the paragraphs that you wrote to me, which I thought encapsulated pretty much the entire issue around finance. You said, and if I can quote you, what happens in a small business is a combination of poor business practices, lack of financial discipline, the muddy mixing of business and personal expenses, the failure to address the business as its own entity, and lastly, the lack of communication with any professionals employed by the business to do more than once a year cheap compliance work. There is so much business wisdom and pain in that one particular sentence. Um, I'm not even sure where to start picking that apart, but what do you think, if you had to pick one of those areas where you say, let's just focus on getting that right this year, dear client, what would it be? What would you think is the single most important aspect that then allows sort of other things to flow from that?
If you're hiring a professional to help you, ask questions, communicate, and go ahead and be honest with them. I don't understand all this stuff. I really am not sure about it. I might need more time, but for right now, I really need the tax return done. But get it that I don't understand this. We don't really know you don't understand it until a couple years in, and we're like, oh, okay, so 1 and 1 is 2, and you're not getting even that much of it. You're not seeing 1 and 1 is 2 in your financial statements. It's just a thing that you throw in. It's a funnel that your money falls through, and you don't even know how it goes through the funnel. Honest communication between professionals gets you better service.
I was sort of hoping that you'd say that,
Mhm.
because it points to the very heart of financial getting, at least starting on the journey of mastering your finances, which
Mhm.
is recognizing that you don't know stuff and that it's okay not to know it, because there's so much competence around you if only
Mhm.
you can tap into it.
Yeah.
What would be, when somebody comes to you, they're not coming to you for a financial therapy session, presumably. Mostly they're coming to you to get something done that they've probably been postponing for a
Mhm.
long time, and that now needs to get done urgently.
Right.
Do you find that ability to sit down on the sort of the finance couch and say, we need to talk about this, do you find, are they receptive to that generally? I know clients cover the whole spectrum, but is that generally your feeling, that people know that it's important, they recognize that they may not have been giving it the attention that they need to, and do you find that when you address that, there is a relief, or is there anger at even addressing it in the first place?
I think it's 50-50. Some of them are quite happy to, some are quite happy to talk about it now. And in that letter, we decided we couldn't do work with people who couldn't create decent financials. And I offered them a way to fix it. Absolutely. I discounted the price and offered them a way to fix it because I really wanted their business to succeed. I wanted them to have the power to deal with their money. And several of them opted out. I can't care more about your business than you do. And sometimes they're just not open to that conversation. And they weren't angry. There was no, it was just, it was almost a no, I can't. And I'm not sure, maybe I'm not a good enough therapist to kind of get through to them. I don't know what the issue was, but there were people that opted out and said, nope, I can't do that. I'm nope, not going to do that. And the ones that did got results. And the ones that we work with on a semi-regular basis, we're still talking to, and we're kind of trying to make those conversations happen. We're building into schedules I've gotten to the point where I think I'm not going to build in tax returns without having at least conversations during the year, not in tax season. So we literally put those on the calendar. Here's your tax return, but we have 3 more conversations, and those are scheduled. And the time is built into your tax return to have those conversations. And it's a starting point to get them to look at their numbers and figure out things. So
do you politely, because I know you can't do any other way, but do you refuse to work with clients who aren't prepared to do the work themselves, to take that responsibility? I remember a few weeks ago you said to me, it's something along the lines of, and I can't quote you verbatim, but you said it doesn't help the client if all the CPA is a place as a person to blame for the financial mess that is in your business, because then you can go from one CPA to the next. You will always find someone to blame, and you can always sort of look back and say they were awful, and this time it's going to be brilliant. But at the end of the day, as you quite rightly say, it's your business and you have to take ultimate responsibility for it. The CPA can't take more responsibility than you are prepared to shoulder yourself.
We absolutely can. And you get so much out of taking responsibility for it. As a business owner, you get to grow your business, move your business. And yes, you can do it without it, but it's really so much harder. It could be so much easier if you understood your financials and moved your business forward by understanding where you were and where you wanted to go and fine-tuning your business. It's like driving a car with no map. I don't know where I'm going. I'm just going to get in it and drive, and I'm going to end up on the West Coast if I keep driving west. But I could get there more directly by taking a map and mapping it out, and not running out of gas along the way, because I can find gas stations.
Yeah, well, there are 3 points to that. Number one, what do you do? How do you know which is west when the sun goes down?
Yeah.
How do you navigate when it's dark? I
Mm-hmm.
mean, I'm not quite sure how far we can stretch this metaphor. And
Yeah.
and why do you want to get to where on the West Coast do you want to be? Because it's a big place. It's a big difference if I end up in Alaska or in Baja, California.
Mm-hmm. Yeah. You got to know where you want to go. You can't plan. You can't live your life. You can't optimize your business. You can't create your own personal net worth. And we've had conversations about that. The net worth of the business is one thing, and that's wonderful to grow it. But in the end, every business owner is doing this to build their own personal net worth, to fund their own journey through life. That's the goal.
Absolutely. And both of us know that, particularly for small businesses, but in fact, across the spectrum, every business, irrespective of whether it's a pass-through vehicle, an S Corp, an LLC, or a C Corp, nests inside a larger personal balance sheet. And sometimes that one asset in the personal balance sheet can be 95% of it. In which case the personal balance sheet and the private balance sheet suddenly become incredibly, or they determine each other. And I would say that is probably the case in most small to medium-sized businesses, that the single largest asset on the personal balance sheet, the one thing that is going to make the biggest difference to your personal wealth, your net value, is your business, larger than your house, and certainly the one asset they can control, or whose outcome they can control. Most specifically, you don't know whether you've bought your house in a great location or not, and you're probably not going to sell it anyway, and it'll take you 30 years to pay down your mortgage, or 25, or whatever it is. But your business can, if you want it to, either through the cash that it throws off and you reinvest somewhere else, or through the growth of the business itself, be multiples of the value of the net equity of your house.
Absolutely. It can be fine-tuned and run efficiently. And
do you want to tell me a little bit about your business, Stapf Financial, and then perhaps give us a few words on how the role of a CPA has changed, mostly through technology over the last, I don't know, 20 years.
Yeah. So we work with small business owners at Stapf Financial. I've got a small staff. There's 7 of us. We try to have a very personal relationship with the business owners. I find that that's really the best spot to be in. If I can talk to them and communicate honestly and clearly with them, we can make things change. Accounting over the last 30 years has gone from in office, where you're working on, when I started, and it was at the end, but I had ledger sheets that you wrote everything on, and it transferred to main ledger sheets. It was all paper. It moved to computerized, but large computers and very expensive and very centralized to where the business was. It's now to the point where you can literally do your bookkeeping on your cell phone with QuickBooks Online. You can have electronic receipt capture that sweeps into your files. There are so many things available to the small business owner today to make that mechanical job easier, to make the records almost create themselves. It's really close to that. And then your job is left to be the cleanup, record the reconciliations, look at the review. You could sit down and spend all that time that you used to have to spend creating records, and you can look at your records and plan ahead and kind of forecast things instead of spending all the time backfilling if you use the software that you have. And so many people are still fighting using the software that they have. They'll do transactions outside of it. But if you run like that larger company I was talking about, all of their stuff happens and it goes right into their file. There's not a lot of external stuff that has to happen to make that work. And a small business can absolutely do the same thing. All of it goes into your file. You can clean up your bookkeeping and do all your bill payments electronically. You can sweep in your receivables electronically. You can do so much and make your life easier and more efficient. And you can collaborate. The QuickBooks files I don't have to go to the client's office. I can pick up the phone, look at the same thing they're looking at the same time they're looking at it, and we can both look at the same transaction and talk about that piece and fix it or leave it and let it go. That's phenomenal. I would have had to get in the car, drive across the street, or do a remote login. The time has condensed. The accuracy gets better, and it makes it able for us to use those numbers to actually do tax planning, to do things like profit first and work with your cash flow, to strategize how we're going to optimize this business so that it builds your net worth. All of those things can happen so much easier today. A small business owner can keep their own books. That bookkeeping hassle, if it's set up correctly, can be a once a month couple of hours and you're done. You've looked at your records, you know where things are, you know what happened, and you move to the next month. So it's not a huge cumbersome process. And I like teaching business owners to do that.
I can tell that there's a teaching element that inspires you in your work, particularly in helping people to understand how transformative it is when they decide to make that step towards full engagement, and to use the resources, both intellectual and physical, that are available to them. Are your clients based all over the US, or are they very local?
We have a substantial local base, but we are branching out. So we do have clients all over the US. Yeah.
And your home base is where?
Maryland.
Okay. And if people want to get in touch with you, where would they do that?
Stapffinancial.com. STAPFfinancial.com. And Linda at Stapf Financial, if they want to drop an email.
I will put that in the notes at the bottom of this video recording. I see the hour is up. I know that you're at a a tax planner's love feast at the moment in
Yeah.
Philadelphia, and that your day is just starting. So I'm going to say thank you very much for three things. Thank you for getting back to me with your very honest and impassioned pushback. I found that incredibly valuable. Thank you for agreeing to this, and thank you for the work you do for small business owners that engage with you and pushing the frontiers of financial fluency. Thanks very much, Linda.
Thank you.
Take care.
Bye.
Thank you. Have a great day.